So in this video, we're going to be discussing the 3 main psychological reasons as to why you keep blowing your funded accounts and how to mitigate these risks and frameworks to put in place to sort of understand and not have this done in the future. As someone who has been through it personally myself, I am relatable with this journey and we can look at things that have worked to help me. So now, there's 3 main reasons as to why someone would psychologically do things that are outside of their strategy, right? And end up obviously losing, right? With FOMO, it's like this, for example. Say this is a trade. You want to get in here on the pullback. This is what you would ideally want. However, price just comes close to it and then starts to take off without you. And now you FOMO into this trade because you were supposed to enter here, but now you've entered up here. But that's not a part of your strategy, and that's not data that you have backtest. So what happens is usually price will come back down and then take out your stop. And then now you're hating yourself because you've entered a trade that wasn't even your setup because you have a fear of missing out. So I want you guys to understand that it's like a bus stop, right? It's like a bus stop. The next bus is always coming. The next trade is always coming. The bus number 1 goes, bus number 2 comes. It's a constant cycle of new trades coming in to the market. So you don't need to worry about missing out on a trade because you need to realize that we have infinite money coming into the markets. Do you understand? Trillions. Yeah. Trillions gets moved into the FX market and futures market and whatever every day. That means that you're not understanding that there is infinite trades in the market. Market is an auction between buyers and sellers, right? So there's always going to be an auction between these two. That is what the market is, and your goal is just to participate in this market, and it's always going to be there. So you don't have to worry about FOMO if you think about these things. Now, a way to sort of mitigate this is only look at the charts maybe between 1 to 3 hours a day, and anything outside this time slot you don't look at the charts. That means you're not going to have FOMO because you're not even looking at the chart, right? So only look at the charts 1 to 3 hours a day. Don't let it consume your life. Now the second biggest issue is something called revenge trading, which is when you take a good setup, right? You enter in this trade here and then you hit your stop loss on the normal setup, but then you're not happy with taking 1L for the day, so you decide to just randomly hop in a new trend that's not to do with your setup so you can get a trade and win. The likelihood is that you are not going to win this trade, and even if you do, it's not a good win, and it's going to ruin your edge. Now, the way to mitigate this is then to do 1 to 2 trades max per day. You need this rule in place to stop yourself from revenge trading, okay? Because now you know I've only got 2 shots on the chart, or 1 or 2 shots on the chart, okay? After that, you're done. You can't take a third one because you have this rule in place. You need to have rules outside of your trading, not just rules in your trading, right? Now, we've got this rule, which is 1 to 3 hours per day. You can adapt these slightly towards what you know your routine is, right? If your strategy means you have to be in the chart 4 hours, then do it. But 1 to 3 hours is a sweet spot that I've found. Now, 1 to 2 trades per day is the max trades per day. I don't know why you should be taking more than that anyway, unless you're some super scalper. If you are, then do your numbers, but make sure you've got a rule for the max trades per day and the max hours per day. And now the last thing why people blow their accounts is greed. Greed. You need to understand, if your system is a 2R, for example, and you're in a trade, and now you randomly, you're not seeing any crazy momentum, there's no fundamentals, that's slightly different. That's when, yeah, you can maybe aim for a higher R. But if you're randomly in a trade, right, you're on your funded account, you're up 2% on your funded account right now on this trade. It's a great trade, you've taken your strategy, but then now you're up 2%, but all of a sudden you're randomly aiming for 8%, even though there's no liquidity there, right? Say pretend the liquidity is down here, and then it becomes all choppy with the price action up here. You, for some reason, just want to make 8%, so you're holding your trade, and what happens is you go up to 3%, 4%, and then we all know this happens. You're close to this 8%. You're like, yeah, I'm not even following my plan, profit targets based on structure, liquidity, etc. Now, price comes down, hits your stop loss, and now you're down minus 2% because you've moved your stop loss or whatever. You could have been up 2% for the day, called it a day, stuck to your rules, but then now you're down minus 2%. So the way to mitigate this is to know your numbers. Know your numbers. Know your risk to reward in every situation. All right, I'm going to say if there's high momentum, I might aim for a 3R. If there's low momentum, I might aim for a 1R. But if there's, standard market conditions, my average is going to be 2R, right? So you need to have your rule book in place for what risk to reward you're going to aim for based on market conditions. Or you can just go and keep it simple and aim for a fixed, for example, 3R or fixed 2R on your strategy, and understand that the numbers will play out based on your win rate, because, the law of large numbers. On the 2R, you can have 10 trades, 5, 6, 7, 8, 9, 10. And then these can all be 1%. You could lose 1%, 2%, 3%, 4%, 5%. And then this one, gain 2% per trade. So 2, 4, 6, 8, 10. And now you're up plus 5% for the month, even though you only won half of the trades. Because that is the win rate. And that's how you need to understand the numbers play out and trust your system. So those three are the main reasons why I have blown accounts in the past, why you've blown accounts in the past, and how we can sort of put rules in place to mitigate these. If you enjoyed this video, drop a like, comment, let me know what you want to see next. I'm always open to hearing your advice and your suggestions, and I'll catch you in the next video.